Hey everyone, James at Yoreevo with our September Manhattan market update. And to my surprise, we actually saw an increase in contract activity in September, although I don't want to get carried away with that. Just focusing strictly on the numbers for a second, we saw 675 contracts signed in September. That's up 16% year over year and 8% from August levels. But what I didn't fully appreciate last month is that, remember, August is a very slow time normally. There aren't many buyers out in the market. So it's not August activity that drives August contracts, it's August activity that drives September contracts. So you can see here, this is the slow August, but then it results in slow contract activity in September. It troughs here and then it rebounds in October because people come back from wherever they were after Labor Day. They see places in September and they sign contracts in October. So here are the numbers we were talking about before, up 16% year over year, up 8% month over month. But if we take the average daily contracts signed over the last few weeks and then apply that to October, we're going to see a decline again. It's going to be down somewhere between 10 and 20%. And then one other thing to keep in mind is that this is almost entirely at the lower price points. So here are the contracts signed by price point by month, and you can see a big jump here under 600,000. Everything else, there are some increases here and there, but about 60% of the increase in contract activity was below 600,000. So still slower as you go up and then more active as you go lower on the price point scale. The bigger story is inventory continues to be inventory. And if you recall, the last couple months, we were saying, okay, listings shot up after lockdown ended, bled up in August, and we were expecting an uptick in Labor Day because that's what or after Labor Day, because that's what you normally see. But given we are already at such high levels and Labor Day was not as meaningful this year, there weren't as many people coming back from wherever they were, we thought that it might be a little more subdued. And not really. You can see we continue to rock forward, actually is at an accelerated pace here in September, and we're now over 9,000 units on the market in Manhattan. And this has plateaued over the last couple days. I don't know where it's going to go going forward because you can see there's not really any trend. This is just normal taking homes off the market around Thanksgiving and the holidays. But where this goes going forward, I don't see any reason why it's going to go down because we're seeing more listings go onto the market than are being taken off the market. This was just shy of 1,000. It was 999 listings net were added in September, which was more than twice as many were added in August. So a lot of listings. So going back to the contract activity, this is in some ways actually going to increase contract activity because there are just more listings out there. If you have more stuff to sell, you're going to sell more of it. But it is going to start to impact prices. And that's generally what we're seeing. We still don't have any hard data on pricing because for a variety of reasons, mostly that pricing data is reported with a very significant lag. But you can imagine that if you're a buyer out there and you have all these choices, way more choices than you've had at any other point, you're going to take your time. You don't really have any urgency because if you lose this place, there's another place that's just like it that's around the corner or going to be listed next week. So we're seeing very little urgency among buyers, and when buyers aren't eager to act, they just fall back and they wait, and then properties sit on the market longer and prices sag. So this is particularly important for listings that are more of a commodity. So if you just have your cookie cutter 1-bedroom, 2-bedroom in Midtown or the financial district where there's a lot of inventory, it's just a race to the bottom because there are so many substitutes. If the buyers are interested in this 1-bedroom, there are probably another 20, 30, 40 that will also fit their criteria, and they're just going to see where they can get the best deal. Where we are seeing more activity is on properties that are more unique or in areas with less inventory. So examples there would be like the West Village or Williamsburg. Those, if you have a good property, I mean, in any neighborhood, but there tend to be more unique and fewer properties in areas like that, they'll still get scooped up. They'll get scooped up quickly as long as they're priced correctly, but you're not seeing as much of a correction in pricing there. It's more the bread and butter commodity 1-2 bedrooms, $1 million, $2 million, where you're seeing a lot of the pressure. And then obviously at the higher end, but obviously that doesn't apply to most people. So here are just the inventory numbers by price point. You can see here there's actually a big increase under 600,000. So going back to my observation earlier. That's playing a role there as well. And this is pricing. You can see it's all over the map and reported with a significant lag. So I would tell you not to get too carried away with any of this. There's a very small sample size. It actually went off the chart here. I didn't even notice that because it was so ridiculous. So ignore the pricing. Generally, I'll tell you we're seeing increased pricing pressure because of the increased inventory levels. And until we see this inventory level come down to more normal levels, I don't think you're going to see that abate. I think you're going to continue to see prices just bleed down. And again, on an anecdotal basis, not on any reported basis, because you just won't see it there. But if buyers don't have urgency, they're not going to be prompted to act. They're not going to be bidding aggressively. So pricing, discount to ask, this all tells the same story. But what I'm really watching going forward is going to be that inventory and the contract activity, because those are the two numbers that we can monitor in real time. And the contract activity and the inventory are going to lead pricing. And so we really need to see either inventory ads slow down or contract activity pick up, or a combination of the two. And then we'll be able to have a little bit of a more stable foundation that we can work off going forward. So again, it really depends on what kind of product and where you're looking. So if you're in the market, reach out to us at info@yoreevo.com and we'll be able to tell you what we're seeing there, and happy to help you in your search. Thanks a lot. Bye.